the housing market crash map that no one is talking about. This housing market map will help us gauge where home prices will be and how big of a crash you should be expecting. In my last video, I talked about how this spring and summer is going to help us determine how the housing market will turn out by the end of this year. Because if during the spring and summer months, home prices continue to rise, that's essentially saying whatever the Fed is doing with hiking up interest rates, people are still buying homes at elevated prices, which in turn makes it more unaffordable for most people. So during these spring and summer months, if home prices stay steady or they dip down a little bit, then we have some hope that we're going to get lower home prices by the end of this year. Now, in today's video, I'm talking about this housing market map that I've been researching, that I looked at the different areas and how home prices are acting, just the activity around the housing market, looking at a nationwide basis. And I think this housing market map will just shed light on exactly what's happening in the market and what you should do as a potential home buyer. Now, before I show you the different maps I was looking at, please be sure to subscribe to this channel. All right, so I'm here on sparkrental.com, and on this website, we're just looking at this map. So this map shows just annual real estate appreciation, and you see that the darker areas are on the East Coast of America. And so far right now, we're having a lot of price drops happening in big pandemic boom towns like Phoenix, Arizona, Boise, Idaho, and areas of California, and some areas of Texas. But now we have the East Coast, and they haven't really price dropped that much compared to the West Coast. And partly that's because home prices in the West Coast, it's just way more expensive. So places where home prices are more expensive, usually they have a bigger drop when we have a downturn. And so you see this darker shaded area right here where you have most of the annual real estate appreciation happening, because these home prices are usually more affordable for the common citizen. And so you have them appreciating while you have the lighted areas and these other areas on the West Coast still at this light area where they're not appreciating at the same rate like they were during the pandemic. Another real estate map that I just want to look at is this map right here. So you see the different counties, right? You see a bunch of Californias are in negative quarterly home growth. So many of these light shaded areas, values of home actually depreciating, but you still have so many areas in Florida, for example, where the home price is actually increasing, right? You have Tennessee, have a bunch of them, Alabama, Georgia, Arkansas, and a lot of these smaller areas, even up here in the Northeast in certain areas. All around the East Coast, you have that going on. Look at another map by Fortune. So this shows the shift in home value since their respective 2022 peaks. This is not year over year growth. This is just showing, okay, the peak at 2022 and where is it right now through January of 2023. And so you see right here that all of these areas, these dark red areas, showing negative growth in home values, and they're all on the West Coast. And then yes, of course you do see some on the East Coast, but most of them are still growing at a small pace. I think these maps are super important for us to understand because at the moment, nationally, month by month, well, according to January of 2023, we still haven't dipped lower for our year over year growth compared to 2022. And so I think once we start seeing these areas on the East Coast start turning darker red or seeing more of a flat line on them, that's when we know, okay, we're heading towards more of price declines. Maybe I can start looking at more houses in the area. And then that's when I think when the both sides come together, that's when we'll be at a better state with the economy, at least have more affordable housing coming down the pipeline. Now, it may take a couple of years for prices to reach their bottom for sure. For example, looking at the last crash, the 2008 crash, it took actually like 5 years until the peak of the market and the recession started in 07, 08, until the bottom in 2012, 2011, 2013. Around that time, it reached its bottom. So that was over the course of 5 years that it took for it to reach its bottom. So for example, if you look at the medium sale price according to Redfin data, you see right here that according to January of 2023, just a few months ago, that the medium sale price was $383. So yes, we do see a price decline happening from its peak of May of 2022. And that usually happens. That's usually the curve between summer months and winter months. But this is a huge drop compared to what happened last year, May 2021 up to January of the next year. It wasn't as big of a than what you see right here. But look at the price. So it's 383 according to January of 2023. Now we have to look at the year over year to truly compare. And so January of 2022 is 378. So it's $5,000 more this year than it was last year. So there's still a year over year increase according to January's of both months. But now we're starting to see the prices decline even more. And I think if we have more data on February, I can guarantee you February is going to show a negative year over year growth. Now looking back at just the area. So for example, Boise City, Idaho. So this is on the West Coast. This town experienced huge growth during the pandemic. For example, you could see right here, this orange line represents 2021 and how much it increased. And in 2022, how much it increased. At its peak, it was at $547,000 for its medium sale price at 18% year over year growth. In that same month, it was a 41% year over year growth in 2021. Finally, we're seeing negative year over year growth happening in the city of Boise, Idaho. Currently, it's showing a negative 12%. So this is a city on the West Coast that's experiencing the price decline that we are actually wanting as consumers. But of course, it's not nowhere near affordable. The medium sale price is still $438,000. Yes, this is a huge decrease from its peak of last summer of $547,000 down to $438,000. But the interesting thing with that, even though they have double-digit price declines, because the Fed increased interest rates, it's still less affordable to buy a house right now compared to last year around this time because of interest rates. And so this number has to be probably negative 20, negative 25% year over year decline in order for it to reach similar mortgage payments as it did maybe last year or 2 years ago. So I was just highlighting a West Coast city. Let's look at an East Coast city. For example, Miami grew a lot and see how it's looking. So Miami is still increasing. You see this blue line representing 2023. Its year over year growth is at 10% currently. So you see this huge disparity between the West Coast and the East Coast, that a lot of parts of the country are still experiencing high growth and prices are still elevated because, for example, Florida, they have no state income tax. The medium sale price for, housing is still relatively affordable, but it's not as affordable as it was actually last year because interest rates and plus the prices are higher on top of that. And so when you have these two coasts come together with year over year negative growth, that's when we'll start seeing real change in the economy. All right, you all. So I just wanted to show you all the map just to show the two disparities between the East Coast and the West Coast and just showing how nationally we need to come together as a nation to have year over year declines in home prices in order for it to be somewhat affordable for most people and people looking for homes around this time. But once again, if home prices decrease, it still won't be as affordable because of interest rates. Interest rates have more than doubled over the past year. And so the same house, even though it was more expensive last year and maybe we have a 10% decrease in home prices, it's still not to the point of even last year. And what we really want as a country is to go to pre-pandemic levels, right? To have a comfortable interest rate and have a comfortable home price. I don't see it necessarily happening. I don't see home prices going to the national average of $200,000 or $225,000, whatever the medium sale price was pre-pandemic. And so we're still going to have these elevated prices. And then on top of that, we're going to have to deal with higher mortgage rates. All right, you all, hope you all enjoyed this video. Please be sure to like, subscribe, comment down below, and I'll talk to y'all later.